The stock market has seen a bounce for the last 2 days, and my question is whether or not we can trust this. I want to show you a technical analysis tip for approaching these sorts of large one-day drops, then bouncing. If you watched the Sunday video, we actually talked about the likelihood of a bounce being very solid. Specifically, we talked about the scenario in which the S&P falls by 2% or more in one day, which took place on Friday. Well, out of 199 occurrences that were studied in our backtesting scenario backtest tool, what we found is that the average one day post this occurring return was about 0.37% for the S&P 500. And about 1 week out, we're looking at about 0.58%. Now, I'm showing you that because we pretty much got exactly that. We got about a 0.75% close following this on the SPX. And it actually is more interesting if we look at SPY just for reference. You can see that the gain was about 0.27%. So it was very close to our historical averages that we've studied in our Edgefinder scenario backtest tool. The question is, from here, where do we go next? Now that we have seen the bounce, let's talk about the next wave. Are we likely to continue to push through those all-time highs and persist in the bull rally that we have seen? AKA, is this all we're going to get for a pullback, or do we have potential to follow through to the downside? In today's video, I'll be taking a technical and macro fundamental perspective look at what is going on recently in the stock market, the precious metals world, and the dollar. As we get started, if you could do me a big favor, hit the thumbs up button and subscribe. Many of my viewers are not yet subscribed, and I post regular content to try and help out traders with what is going on in markets from, like I said, a technical and macro perspective. Remember, this is not financial advice. Trading is high risk. Let's get into it. Okay, so I'm recording this at a later point in the day. My editor is working on the video, but since recording this, pretty much everything went crazy and sort of followed through to the downside. Here is an update on the silver position. I am still in the short position. However, I have just trailed my stop loss. I've also updated members inside of the group with my new stop loss level, which is just above the 38.2% retracement, as you can see on this 4-hour chart. So I'm still in the trade. Things are working out really nicely with this silver trade. It's turned into kind of a story position for me because this thing has just kept going and going and going. Looks really clean. There's no reason for me to cut the trade. However, now with this 38.2% retracement level holding really well as resistance, my plan is to keep my stop loss just above that area after the significant engulfing candle that we just had form. So kind of updating my technical analysis here. Still like the technical downtrend that we have, but also still enjoy being on the right side of this macro fundamental move. The other thing that is completely erasing all of yesterday's gains is the NASDAQ. NASDAQ completely back down towards these lows. We'll see if this level acts as some kind of support zone today, or if we are going to break below. Critical thing to watch for if you are trading NAS, NQ, ES, etc., all the indices. Watch this level to see if we can actually close decisively below it. We'll see how price action reacts once now it is retesting the lows of this move. If you're going to have some sort of larger scale correction on the NASDAQ, if we're going to see the selling continue, it's going to probably be a decision point to see some sort of decisive failure to hold this level of support. Okay, so I want to start jumping right into what is going on in the S&P 500, and I want to show you a cool little tip that I like to do with big one-day drops like this. I'm going to take a Fibonacci retracement tool, use it on any of your favorite charting platforms, and simply draw a retracement from the start of the one-day drop move to the end of it, or in this case, the extreme. But let's just use from the extreme start of the candle here to the bottom end of the range. That being said, we now have 3 levels populated on the screen. What I'm really going to focus in on is the 50% and 61.8% retracement zones as an idea of where price action maybe wants to go according to demand from buyers and sellers. So we can analyze from a technical perspective this specific level. Yesterday, intraday, we turned around to the tick here on the S&P 500 at the 50% retracement zone. In other words, yesterday we rejected the 50% retracement of this move. What significance does this have? Well, think about it logically and psychologically. If we have this big day drop and in the following few days we quickly recapture most of the move, 50% or more, we start to feel a lot better very quickly. But if the sellers come in and say not so fast and are actually able to keep price at or beneath the 50% retracement of this move, I would argue that in the short term, that looks more like bearish price action. Now, we can, of course, drop this down to the 4-hour timeline to get a general perspective. And in this case, I'm actually going to go from the same type of move. So let's go from Friday's trading action. So really, we'll call it Thursday's close here. I'm going to just put this right here. And we can kind of draw in the same idea. There it is, that 50% retracement zone. Watch that as our key level today. If we close decisively above the 50%, but maybe a more conservative approach would be looking for a break and close above the 61.8% retracement from Friday's trading action, I think you have a most likely scenario in which the bulls take it and continue the onward feverish bullish demand into the critical events that we have for the rest of this week. Now, let me not downplay how important the rest of this week is. On deck this week, we have CPI tomorrow morning, PPI on Thursday, which is very important as well, and a huge event for stock traders and index traders, futures traders, etc., SpaceX on Friday. We have a massive record-setting IPO in the US stock market that is expected to be $2 trillion in valuation. Guys, that is on par with Amazon. Amazon makes a ton of money. SpaceX loses a ton of money. Now, of course, SpaceX is very innovative in the sense that it might be a huge, like if the space feverish demand continues like it has in recent months, perhaps there is much more potential upside there. But there's a lot of hype. And my personal opinion on SpaceX, not financial advice, but my personal thought on this is I will be standing clear of trading any SpaceX shares myself. However, I will very greatly and very closely watch how this impacts the underlying stock market. Because if you trade S&P, NASDAQ, Dow, etc., if you watch any of these things, this event matters significantly. $2 trillion is a lot of money, but even more important than that is the sentiment and response of the market to this IPO. Because behind SpaceX, what do we have next? We have OpenAI, ChatGPT's founder or company. We have Anthropic behind Claude. We have Stripe. We have many IPOs that are lined up behind this that are blockbuster events. This sets an important precedent about how this market feels about AI-related spending and risk. Because if you're buying SpaceX, you are taking a big risk in the sense that this is an unprofitable company. It is XAI is in there too, so it's a big AI thing too. And this whole market is pumped up on AI hype. So we need a strong response from SpaceX. Otherwise, we've got problems. And so when I look at this, when I look at indices, I am pretty cautious going into this event, given that intelligent investors, winners in SpaceX, have been in the stock for 10 years. This is not a new company. This is not a new investment. It's just new to the public. And so I see a lot of valid concerns out there on social media talking about how this is the biggest liquidity grab potential in history because you have a ton of hype around this name, but also the indoctrination into some of the major US stock market indices, which passively buy stocks within them. So the NASDAQ, if you get into the NASDAQ 100, you automatically receive essentially capital flowing your direction through passive index funds. So if the market responds negatively to this, it does draw a serious skepticism around the AI spendaholic season that we've seen for the last few years. So it's huge. It's a major, major volatility potential catalyst to watch how SpaceX plays out in the next few weeks. And if you're interested in seeing the trades that I am currently in, taking, updating, etc., I share all of them as signals within our Discord server. Currently, you can get 40% off with the promo code that you see on your screen right now, YTVIP. Inside of the group, I share every position that I'm in, why I'm taking it, explanations behind the trade, entry points, exit points, and I also document how my strategy works. If this is something that would be beneficial to you, if you are serious about your trading and would like to learn alongside myself, Marco, Ivan, Chris Pulver, and many other wonderful traders within our community, then I encourage you, take advantage of our 40% off discount that we are currently running. It's a huge savings on a one-time purchase to join our group. Also, if you want to contact our support team and ask some questions about the VIP group or set up a payment plan, we have had a lot of people who want to take advantage of the one-time price, the lifetime option, but they want to split it up into 2 payments. We are offering that if you take a second to send us a direct message on our website. Simply head to the first link in the description down below, start a chat, and you can speak to someone from our team and they can arrange that for you if you are interested. If it's easier, you can also contact us over Telegram, WhatsApp, or Facebook Messenger. The same can be said for the NASDAQs. S&P 500 and NASDAQ look very similar here. Big Friday one-day drop. I am watching to see with this bounce, is this a bounce that rolls over? And if it does break the lows, I think from a technical perspective, we have more room to pull back. Or if we can close decisively strong today above these levels, then I do think that you have the potential to maybe try and squeeze into that SpaceX event, maybe buying the rumor and selling the news. That's, again, my bias on it. Maybe I'm wrong. Maybe SpaceX just flies for the next 3 months. But historically speaking, if we're going off of history, really hyped up IPOs tend to have downward price action. Not every time, maybe this is the exception, but generally speaking, feel free to do some research on this, but generally it's not a super positive price action in the weeks to come or months to come afterwards. In terms of some of my active positions, I'm still short silver. I discussed this at length in today's live stream on how I plan to manage this trade. So check out this clip from the live stream to hear a little bit of my breakdown on how I plan to manage this open silver position. And I pretty much have a binary scenario in which it either breaks higher and I trail out of the trade for a profit, or if we break low, I'll manage the position. Listen to my thought process as I spent like 2 minutes going through this on today's live stream. For my silver position, my plan here is I'm looking at a pretty binary situation. Let's do scenario 1 is something changes. We rip higher. There's nothing more to say than I stop out and take profits. I'm out of the trade if we break the 61.8% retracement on this recent move that I've caught in silver. That is the downside, meaning I can't lose on this trade. I'm going to make money on this trade. The question is, do I make a lot more money or a lot less money than where I'm currently sitting? Let's say, for example, scenario 1 is, right, we get stopped out, we take profits, right? We, via trailing stop, we take profit. Option 2 has many variables, but effectively, if we get some kind of break through the lows, then I will look to tighten my stop loss. Now, this scenario, when I say scenarios, we could retest the 38.2 and then do that. We could retest the 50% retracement, then do that. We could test the 61.8% retracement, then ultimately do that. All of these scenarios, I am comfortable where I am at with my silver short position, okay? All of these scenarios, if this happens, I'm not freaking out. I'm not worried about it. It is what it is. The markets are going to do what they want to do. The binary scenario for me is either we break the lows and I trail my stop loss further using market structure, or we fail to hold this current trend and break higher. In this case, I stop out for a profit. So I can't lose money. I'm in a wonderful position. It's not all the time that I'm in this spot, but it's the best feeling ever. I'm in the spot of I'm going to make money shorting silver. Do I make a lot less than I do now, or do I continue to let this thing run? And you might say, well, what if it does that? That's going to stink. Yeah, it's going to stink. On to the next trade. Get used to it. Trading stinks sometimes. Every strategy, we talked about this extensively yesterday, every strategy has pros and cons and frustrating moments. This happens to me sometimes. But you can play it back in your head and say, well, why would you do that, Nick? Why would you let that much profit go away? Well, because I told you why. Because all of these scenarios, I can stay with the trade. And I feel that nothing has been broken in all of these scenarios. If I think that the trade has not been broken because we test these levels, normal wave type movements, then I shouldn't exit the position just because of that, right? Now, what I might do is if we do start to press down towards the bottom end of this range again, I may tighten this up a little bit because I would like to see if this starts to act as more of a clear level of resistance. I may start to look for that opportunity to bring that stop lower. So I'm watching this current area, but I'm not worried if we go back and retest these levels because that's normal price action stuff, right? I don't want to be whipped out preemptively, and I'm comfortable with accepting the risk that I might give back more of my profits. Okay? We have to acknowledge we don't know with certainty what's going to happen. I've mapped out all scenarios. I know what I'm going to do with my silver position with precision. Because I don't know what price is going to do with certainty. I know generally that I still hold a bearish outlook on silver. I will manage the position accordingly. I also wanted to take a second to let you know about today's video sponsor, 8Cap, and a great way that you can access our tools completely free with a special offer bonus they are offering to their clients. So if you use specifically the link found in the description down below, a1trading.com/8cap, it has to be that link for you to get this credit. What you can do is essentially sign up for an account with 8Cap if you like the brokerage, if you think it's a good fit for your trading, if they offer what you need in your trading journey, etc. You can actually take advantage of one of their package offers they have here, where essentially if you make these certain deposit criteria requirements, they will actually buy a copy of our products. Like for example, Edgefinder, you can get Edgefinder for free, Gold membership for free. You can get all access to this stuff without paying for it if you move your account over to 8Cap, if you like what they have to offer and you decide it's the right brokerage for you. Like I said, you can explore the full terms and conditions and all the details on this offer down below in the description, or simply navigate to a1trading.com/8cap. Meanwhile, the dollar is pulling back here today, but please be aware that tomorrow's CPI event will be a big one for the dollar. Wondering whether or not, again, we are expecting, by the way, 4.2%. That's the anticipated inflation rate. That is up from where we currently sit. Let me show you. So we know inflation has been on the rise, and it is expected to continue to be on the rise, with the anticipated number tomorrow being 4.2%. If you get a number that is higher than that, it will be dollar bullish, probably stocks bearish, gold and silver bearish. And if you get a number lower than that, if you get 4.1, 4%, etc., it will be a relief, a sigh of relief to the concerns about inflation rocketing higher. So tomorrow's CPI print is very, very important, especially given the rise in inflation that we are recently seeing due to the conflict in the Middle East. I'll be live streaming the CPI event, so make sure to subscribe, turn post notifications on so that you can tune into the live stream when it starts. So following Wednesday's CPI, we'll have the producer price index, which looks at wholesale prices, coming on Thursday. And this, to me, might be even more interesting than consumer price index data, just given how we saw a significant jump in wholesale prices in the prior report. So I'm very curious to see how this happens. I also want to mention that part of the reason I think we saw a bounce on the stock market going into this week is because put volume exploded on Friday and on Monday's trading action. What's kind of interesting here is that crowd sentiment got really pessimistic, really bearish, and oftentimes what we see during those is we get kind of the fake out bounce, where you see a big bounce that kind of scares all the people who bought puts, gets them out of their positions, and then you have the market roll over. Will it be exactly like that today? I'm not sure, but just generally speaking, I think it is worth mentioning that put volume is something to keep an eye on to get an idea of what crowd sentiment is looking like in the here and now. And I typically use this as a contrarian indicator, meaning when crowd gets bearish, I get bullish. When the crowd gets bullish, I get bearish. Now, of course, I also factor in macro fundamentals, and we have a scorecard system for a reason here, where essentially we document all sorts of economic growth metrics, inflation, jobs market, et cetera. And then this crowd sentiment signal, that's going to be looking at put to call ratio. So we are short term getting that bullish signal, but you can see that alone is not enough for me to get an overall bullish rating on S&P 500. Short term, I still think the stock market may be due for a little bit of a pullback here, but I don't have any interest in actually shorting the S&P, NASDAQ, etc., because our scoring metrics are getting a pretty neutral reading right now. And for that matter, it's also worth mentioning that silver is also getting a neutral reading as of today's reading. Recently, it's been getting many bearish readings, as you can see in our Edgefinder score over time history chart. But it's because the same reason we have crowd sentiment getting short-term bearish on precious metals. And that to me produces a scenario where we very well could see, as I've been talking about, the possible bounce in silver and gold. We can see this also, I believe, evident in gold as well. Yeah, you can see gold also getting a crowd sentiment signal that is short-term bullish. So I would not be shocked at all to see a bounce in precious metals. But again, I am ultimately staying with the short position predominantly because of the macro fundamental scenario that I am seeing right now. Trading fundamentals can be a lot of hard work, but we actually made a pretty cool free Telegram channel where we are publishing constantly updates on what is going on from a macro fundamentals perspective. And no, it's not AI, it's not written by a robot, it's written by a real person on our team. His name is Alan. He puts together a report each day on what is going on things like gold, currency pairs, commodities, indices, etc., on a global financial fundamental analysis basis. It's a really cool newsletter where you can basically stay on top of things by reading for like a minute per day. If that would be interesting to you to join the free Telegram channel, there is a link in the description down below on this video that you can join and get into the action there. We also offer special discount perks for our products as well as for funded accounts and for brokerages, etc. And we also do some giveaways as well. So definitely take a second to join the Telegram channel in the description down below. I also want to take a second to just genuinely thank you for supporting my content here. Make sure to subscribe and hit the thumbs up button if you have not already. And I do hope that more videos in the future will continue to help you on your trading journey. Good luck. Thanks for watching.